Hi, everybody. Welcome to the second video of Chapter 5, where we will talk about check tampering schemes. So there are 5 different types of check tampering schemes we're going to talk about in this video. So forged maker schemes, forged endorsement schemes, altered payee schemes, concealed check schemes, and authorized maker schemes. So those are the 5 that we're going to talk about. The basic idea behind each of these 5 methods is that our fraudster is either going to prepare a fraudulent check, or they're going to trick their employer into generating a check and handing over their money. So those are the 5 different types of tampering schemes we're going to talk about in this video. So the first scheme that I want to talk about is our forged maker scheme. So the term maker means the person who is signing the check. So in our forged maker scheme, we are going to fraudulently sign someone else's name on the bottom of these checks. So who's typically going to do these schemes? This is typically going to be someone who has access to the company's check stock. So employees who it's in their typical job duty to prepare these company checks, that's who's most likely going to do this. But it could also be someone who doesn't have access to those checks. These individuals are either going to have to come up with some way to steal these check stocks. And this could be simply because there's lack of control and the checks are just sitting about, so they're easily taken. Or maybe they're colluding and working together with someone who does have access to the company checks. So those are 2 means that they can go about creating this forged maker scheme. The third way is that they could also produce counterfeit checks. So they could just, have checks printed with the organization's bank account number on counterfeit checks and start writing checks with those. Any of those 3 options are how they could obtain the check. So how can we safeguard our check stock? Obviously, we want to keep the check stock under lock and key. Only people who absolutely need to have access to our check stock should have access. So that's the biggest thing. Some other things our textbook talks about is using a watermark or security threads or some other marking technique so that we can clearly identify legitimate checks versus non-legitimate checks. Similarly, providing the printer with that paper so that this paper is our specific type of paper, and the printer doesn't have that paper except for the checks that we give them. That would be another way. Looking for out of sequence check numbers. This is a common auditing procedure. We're looking for duplicate check numbers or huge gaps, particularly when we're doing our bank reconciliation, looking at that bank statement to see what is cleared, to see if anything is out of order. And then another good little control is just to compare the starting number in your checkbook at the beginning of the day with what your last check was at the end of the day. So if you ended at 472 yesterday, then today it should start up at 473, just so that we see nothing is missing in the middle. And why is that? Because if someone is going to steal checks, they're going to do it when you're not there, so after you've already left for the day. So that's another good little control to have. So some things to consider with our forged maker scheme is who we're going to make it payable to. So we know that we're going to assign someone else's name, but when we have to make it payable, who are we going to make it payable to? In most instances, these forged checks are going to be payable to the perpetrator so that they can easily cash those checks, because a check that you can't cash isn't really worth anything. So they're going to want to be able to cash it. So most often they're going to write it out to themselves. They could also write it out to an accomplice who then would cash the check and split any of those proceeds. They could also make it payable to cash if they don't want their name on the front of the check. They could make it payable to cash. However, on the back, they would have to endorse it So their name would still be on that check through the endorsement process. They could also make it payable to a vendor. So rather than having paying myself to get cash, I could just go and pay for things and use these checks. Go to Walmart, buy my groceries, and write a check on my company's check stock. So that's the other option. And then finally, how do we forge the signature? So we can either freehand forgery, just writing our name like we generally would, having a photocopy of the authorized signer, having a check stamp from the authorized signer, maybe a computer generated signature. Any of these means could be used to add that forged signature onto the bottom of the check. And then lastly, relating to these forged maker schemes, how can we prevent or detect it? I'm going to sound like a broken record. Having good internal controls. In this case, we want to safeguard those blank checks, make sure that only the people who are responsible for preparing those checks have custody of those checks. We're going to want to separate the duties of who's preparing those checks and who's signing those checks. Those are some things that we would like to do. Restrictive list of authorized signers. So only certain people should be allowed to have signing privileges, and that privilege should rotate. The signers should verify their signature on return checks to make sure that the signature is correct, because we could have those freehand signatures that are not our own signature. So that could be another thing that we could do. The next scheme that I want to talk about is forged endorsement schemes. So the endorsement is when you turn the check over and you have to write on the back. So in a forged endorsement scheme, we have a legitimate check that has been sent to a third party. So maybe we're paying one of our vendors, but the employee steals that check and forges the third party's signature and then adds themselves as a second endorser on that check and then cashes the check. So this is typically going to be occurring from an individual who's involved in the delivery of checks. So someone who's responsible for mailing out these checks, maybe somebody in the mailroom or a secretary who's responsible for mailing out checks. This is who's typically going to have this type of fraud. Again, poor controls over the signing process is a indicator that this is a possibility. Converting the stolen check, how do we go about getting the cash after we've stolen these checks? They would try to find some place where they can go and cash checks where ID is not required. A lot of times, if you're endorsing it, you're going to have to sign the check. So they're going to want to go someplace where they don't have to do that. And they would, again, double endorse the check. So they'd sign it with the name of the company and then sign it again with their own name. And then how can we prevent or detect this? Again, separating those duties. Separation of duties is going to be our biggest thing that we can do. Training our employees. Investigate vendor complaints. So if a vendor doesn't get their payment, they're going to call and complain. So investigating these complaints is one thing that we can do. We also would like to look for duplicate payments. So if we have made a payment and then the vendor calls and says they never got it, so we cut a second check, we could look to see if we have multiple payments for the same invoice. So these are all different things that we can do to prevent these forged endorsement schemes. The next scheme I want to talk about is altered payee schemes. So in an altered payee scheme, we are just, instead of, this is not changing the endorsement on the back, but changing who it's payable to on the front. So we could either insert a new payee, so adding a fake name in place of the true the true payee, entering the wrong person into the accounts payable system. So we think we're paying one person, but we end up paying another, or tacking on. So maybe the vendor's name is, ABC, and then our fraudster creates a fake company to ABC something else, and then they can tack that on. Other ways that they could falsify these checks, they could use erasable ink, and then after it goes through the legitimate process, erase that ink and insert their own name. Or if we're really loosey-goosey with our checks, maybe our authorized signer is going on vacation, so they leave us 10 checks that are pre-signed, and then we can write those out to whoever we want. So having those blank checks around that are already signed is usually a pretty big no-no. So converting altered checks, as in with all of these fraudulent, conversion is where we're going to endorse the check on the back, since it's, you know, already made payable to that, not super important. How can we prevent or detect? Again, segregation of duties, making sure that the preparation, signing, and delivery is all separated. When we're doing that reconciliation of the bank statement, making sure that those checks are who they say they're supposed to be to. Carbon copy, so if we had erasable ink, we would see different names on there. So using permanent ink, those are some of the ways that we can prevent this from happening. Oops, too far. Concealed check scheme. So this is where we have kind of like that rubber stamp supervisor. So where they're just signing a whole bunch of checks and they're not even looking at them, and we just slip a fake one in there, and they sign it, and then, you know, we get that check. So that's another scheme that we could use, is we're taking advantage of the signer because we know that they're not going to look at it very hard or very closely, and they're just going to sign it like that, again, like that rubber stamp supervisor that we talked about in the last video. Authorized maker schemes. So these ones are going to be our most difficult to detect, because an authorized maker is someone who has that signing authority, but they are just writing personal check or writing fraudulent checks for their own benefit. They're signing their own name. So they're just having these fraudulent checks. These oftentimes will happen when we have overriding controls. So the person who's responsible for authorized maker schemes, someone who's authorized to sign checks, is usually going to have pretty high influence. Maybe they're going to be the CEO or the owner of the organization. So if they come and ask for a blank check, you're probably going to hand it over. So because they have this this influence within the company, they can overcome some of our normal controls that are there to prevent fraud. So overriding controls are an issue that we have here, or if there are just no controls in place in general. So if no one is paying attention to what accounts we have things coded to, or we have very few controls in place to prevent the fraud, we can see these sorts of things. How do we prevent this? Again, separation of duties. We want to make sure we don't have any blank checks laying around. Requiring dual signatures. So if we require that authorized signer to get a second signature, that would be a good thing as well. Having an up-to-date vendor list. So we shouldn't be paying checks to anyone who's not on that vendor list. So looking at that is another way that we can prevent or detect this. Concealing check tampering. So since most check tampering schemes do not consist of a single occurrence, but instead occur over a long period of time, the fraudster is going to want to be able to conceal the scheme so that the employee can remain employed and keep on stealing money as long as they're there. So hiding the fraud becomes extremely important so that they can continue. So concealment of the fraud means not only hiding the identity of the criminal and who's doing the fraud, but also hiding the fraud itself. So The most successful frauds are those where the victim company doesn't even know that they're being robbed. So concealing that check tampering becomes important. In invoice or payroll schemes, the fraudulent payment is entered in the books as a legitimate transaction by someone other than the fraudster. So the perpetrator generally doesn't have to worry about concealing the payment on the books. But in check tampering schemes, that doesn't necessarily always work. So in forgery and authorized maker schemes, the perpetrator is the one writing the check, and he is usually the one coding the check in the disbursements journal. So he has to explain what this check is and where it should go. So that is one key to concealing these check tampering schemes. The fraudster reconciling the bank statement. So the person who reconciles our bank statement is, the person who, it's kind of their job to help find some of these errors. So many of the perpetrating check tampering frauds are involved with the person who is also responsible for reconciling those bank statements. Again, having that separation of duty is important. So bank statements won't reconcile if we haven't recorded checks. If we have unrecorded checks, we're going to have some issues. So we want to, if we have this happening, we may have these outstanding checks for or checks that are clearing that are causing some problems. So we want to make sure that the person who is doing the bank reconciliation isn't also the person who's committing fraud. Maybe having rotation in that might be helpful. So in re-altering a check, so we know that altering a check is changing the check in one way, shape, or form. And then in re-altering a check is reverting that back to kind of hide that the check was altered in the first place. So this is what we mean by re-altering checks. So when the check is returned, the employee is going to erase their own name and enter the proper name into the payee line. And that will help to cover up that forgery. Another item that we might need to think about is how we are going to falsify the disbursements journal. So every check that is recorded, and every journal entry where we are crediting cash, we're going to have to debit something, whether it's an expense or a capital asset or something. So how are we going to indicate? So we're going to write the check payable to themselves, but maybe list a different person as the payee on the books. So maybe we're going to say, even though the check is written out to Janet Jones, we are going to, in the disbursements journal, say that we are paying, Amazon or someone else, so that it's not scrutinized when, we look through disbursements journal and see that we have a bunch of payments to one of our employees. Falsely enter amounts of legitimate checks in disbursement journals. So maybe we're going to overstate a legitimate check and then not record a check that we wrote to ourselves. We also are going to code fraudulent checks to accounts that are rarely reviewed or have a lot of activity. So if we have, cost of goods sold, we have tons of activity running through our cost of goods sold account. So it's unlikely that, a couple of extra checks would be found out in that particular account. Reissuing intercepted checks. So re-entering an invoice so the vendor doesn't blow the whistle. So ultimately, the vendor is going to want to get paid. So if you're intercepting a check that's made out to the vendor, they're still going to want to get paid. So reissuing intercepted checks, having duplicate checks is one way that we can do that. So we could either enter two separate invoices. So maybe invoice 101 A and 101B to, and the one that's 101A goes to the vendor, the one that's 101B goes into my bank account. So re-entering that same invoice or issuing 2 checks for one invoice, and one of them I'm going to hold on to. So either of those ways that we can intercept those, reissuing those intercepted checks. And then last but not least, we can have bogus supporting documents. So here we want to have either invoices or purchase orders, receiving reports, whatever it might be that's going to support those checks so that we could ultimately enter in those transactions. Only practical when employee writes checks to someone other than himself. Obviously, if we see a payment to one of our employees, that's going to be a red flag that we'll see. So that completes video number 2. I have one more for you on the remaining couple of schemes that we'll talk about this chapter. So I will see you in video number 3.